Hey, it's Mark from dynamitestocks.com and Stock Pursuit. Thanks for tuning in. And if you like these videos, be sure and subscribe to my YouTube and subscribe to my Substack. My Substack is linked in my link tree on Twitter, X, and it's on my main website, stockpursuit.com. There's a link at the top. So if you're an investor and you do investing, that's what I do on my Substack. It's strictly fundamentals. There's no technicals or anything else. And it's just deep value stocks. So check those out if you haven't yet. If you like my videos and the way I think about things. So I'm just gonna do a recap tonight on what happened today. So it was pretty interesting day. Like a lot of the levels that I was talking about failed. Like the semiconductors, they tested that level there, and then the momentum just died when it hit these two levels. So it's pretty bearish, at least in the short term. And that's a big candle too. I mean, it almost went back down to the channel support on today. So it respected these channels really well. This top level there, and then it hit that one too. So it's kind of a double whammy there. So still got this up channel though, but it's not looking too bullish right now. And the XHB came down too, and it's about to test this channel resistance, so it's got to hold that level. Looks like it might test it tomorrow or on Monday. So maybe Monday or Tuesday, it'll figure out what it's going to do here. But if it doesn't hold this, it's pretty bearish because it's got to hold this form of resistance, because that momentum was a big deal. So, but the thing too is this one hit that big level there too. So that was the big level there that it failed at. I didn't even get close to it. And the XHB is pretty close to breakdowns, breakdown there. But that's why I like the Redfin better, because Redfin's just been breaking down for months now. So it's related to housing, of course. So this one's been acting really well. It's kind of done just what I thought I was going to do so far. Like what I expect now is, some more red days, and then it's at risk of another gap down like it did back here. Like they had a gap down off earnings, but stocks can gap down if they're weak anytime. But I just see this one going lower too. And even compared to the market and to the XHB is just really weak. So those puts are doing really well. I'm glad I picked those instead of Domino's, because Domino's kind of hung in there today. Domino's was green for a long time, like pretty much all day. That might have been after hours where it went down, but it was up most of the day. So I had a feeling it was going to possibly get choppy. That's why I kind of like this predictability and the Redfin better, where it's just been going down consistently. And it's not guaranteed to keep doing that, but that's what it's shown it likes to do. So a lot of times these just can go on for a long time, if it's in a weak industry and they're struggling. And I also put on the ORC puts, that was the gap down scan, bear flag. And it had some nice pushes today down lower, but kind of finished break even. So it's still a good setup, short side. And I still had the Victoria's Secret on watch too. It did a triangle, like that was the triangle intraday or on the multi-day. Yeah, there it is. backfill. There we go. Yeah, so I was surprised it actually popped out of the triangle and not going up. See, the way triangles work is, the triangle forms, and then when it gets to the tip, it always has to go in a direction. It's kind of like Bollinger Bands, where there's like Bollinger Band compression. When the Bollinger Bands get really tight on a stock, they have to go one way or the other at some point. So when they decide to go a certain direction, that's usually the way they can continue to go. So that's the setup on triangles, is when it gets to the tip is where the move off the tip is the key. And it got kind of messy here, like it did this, well, it kind of rode up on this channel for a while and then popped, but it's not really like the perfect triangle because it's got this, because it kind of went down really low here, but that's the direction it went. So I can't be short biased on this now if it's going to break out over the triangle. It's very interesting. Like I don't think it's really a good short setup right now. I'm probably gonna take it off my watch list because it may start to trend lower, but it can get really choppy here. It's pretty much choppy all day too, just sideways. It's not the kind of stock I like to trade. Like I like the signals to work out. So it didn't really do much today. It's kind of like oil. The crude oil broke out of the triangle. But like I was saying, that's the thing about triangles, is when they get to the tip, that tells you where it's going to move, or what the move is. So I really thought it was going to break down lower, but sometimes, stuff surprises you. So I'm just going to look at I typed in CL by accident, but so let's look at CL futures. There we go. Yeah, so we hit that. So it really went early. I thought it was going to go closer to the tip of the triangle, because based on the levels, it had a little more to go, like another day or two, but it popped early out of the triangle and it popped upside. So that's really like a signal there, but I'm pretty cautious at this point to trade it because it's not really acting like I thought it was, and it could easily just be range bound. Like it may just bounce around between 90, 94 to 82 for a month. Who knows? It can get range bound, like all year is pretty range bound, here. So I like to trade crude oil when it's breaking out or breaking down, like back in a couple of years ago. I'm not sure. Like there's a lot of things that are kind of indecisive here. But if I had to trade this, if I had to make a trade on this, I would go bullish. I would be long because it broke out of the triangle to the upside. So that's bullish, but it's still below a breakout level. So it's not really momentum. Like I usually like momentum where it's about to break out or breaking out, especially on oil. But so I probably won't be trading this for a while. And natural gas broke down. It held that channel, or it held the resistance channel so it broke down because it has resistance there. Like it's hard to see on this chart, but there we go. Yeah, it goes back to April really. This top line here, this top one, it goes back to April was where it found resistance at that level. And well, this isn't even the futures, but yeah, let's look at the futures better. It's gonna be better. Well, I mean, you can kind of see the you can kind of see it with the UNG though. Yeah, so yeah, the futures are way different. Yeah, so yeah, it's still above the breakout, but see that's the thing is you have to look at the futures to really see because the decay, like I was talking about in the past, the decay in these ETFs is like a big deal and it's very notable there. You can see. So the UNG ETF hasn't even broken out because of that decay. The decay is when it has to roll these, it has to buy contracts, it has to keep buying the futures contracts because direct, it's not directly invested in natural gas. It has to buy the contracts. So you get like there's a lot of transaction costs and it's not as pure play as the natural gas futures because it has to buy them. So, but it pulled back pretty much today, but it's still not really that bearish. It's still above that level. So it's kind of normal activity. And the GRTS was nice today. I bought those puts like right on the breakdown there on the first red day. So it's gonna be a really good entry if this thing goes down, keeps going. Like I got like sort of like a perfect entry there, maybe off like 10 cents or something, but I don't really like this volume. Like these sell volume days are decreasing, so that means the consolidation's could be leaning bullish. Because that's the way these bull flags work, is bull flags are where the sellers are just consolidating it. So it looks kind of bull flaggy based on the volume, which I don't like because I want to hold this short for like the rest of the month. But so I didn't take anything off today of it. I was gonna sell some, but it was just such a red day. I can let it run because I got the October 20th puts, but I mean, it's pretty wise to take profit here, but I'm just kind of seeing what I can do here. But based on today, it's like if it breaks above, the high today at 280, 248, that's like a big risk of a squeeze or a push up. So hopefully I'll be taking this off on Monday if it doesn't get really weak. And the shippers have been interesting too. Like a lot of these ones I've been talking about are still up. Like the DHT, I believe that one's like oil and gas. So it's not a dry bulk shipper, but it is a shipper and it's still going. Like I've been talking about that one in Frontline, it's still going. The my GOGL calls are pretty much wrecked at the moment, but it's still holding this level. But the better one was actually the SBLK because it's acting really well. It's in this channel still. It's in this channel and it's like in the middle. It's about to come up to channel support. So the way it's going, it looks like it's gonna hold. But we'll see on that. Like I'm not really itching to take any more trades in the shippers. But ship's holding in pretty well too. It's been up since I mentioned it. And the XHB, I was thinking about that. Because I had called the top on that one when it was forming. So I forgot I did a post on dynamite stocks on that. Like, see, like I started watching it back up at the top, and I can show you that. I did a post on that, so just to show you, I know what I'm talking about with these patterns. Yeah, here we go. So yeah, back in August, so a long time ago on this chart, I did a post on the rounding top because it was such a good rounding top, and that's when I started to notice it, when it broke that, when it formed that initial rounding top right there. Yeah, there it is. So I drew that up back in August, and it's played out really well for the downside since then. So you can see it's down. Yeah, it was like 79 when I alerted that top, and now we're in low 70s. Well, it went all the way down to like 70, 73 or so, but I think it's gonna have a lot more downside. I mean, it's actually playing out like that's this here where it had a nice spike up and then failed. It looks a lot like what just happened here. See, it had 1, 2, 3, 4, 5 days in a row, and then crash, spike on that down candle, the big candle there, and it did the same thing this week. It went 1, 2, 3, 4, basically 5 days because it was green there. Yeah, 1, 2, 3, 4, 5 days, crash, exact same thing. That's kind of that's kind of funny actually, because the day range looks the same too. Almost like, look at that candle, there, which is the top, looks a lot exactly like, it's like an analog to that candle there. Wow. That's the thing about when you look at these charts, you just look at the history, you can see things like that was kind of an analog. Well, I think that looks like the exact same percentage moves relative. Wow. Well, the bear flag played out a little differently. Like, that bear flag was kind of long there. But it's interesting when you can see things like that. But I was kind of I was kind of mad that I missed the short on the semis, because I was looking at it up here. When I was looking at it, it was kind of still hovering around green on the day, and I wasn't sure if the momentum was going to keep carrying. Like, I thought it was probably going to have a weaker day. I thought I was going to have like a weak day today, but not this week, not this bad. So it's kind of surprising, but it's not good. I mean, it just makes me more bearish. And I do have a lot of puts. I still got puts on. And the VIX spike was nuts too. The VIX was a big spike today. Like, seems like the biggest one in a long time. I'm sure somebody's got some data on that. Maybe since March. Could that be? Wow. Yeah, I was kind of surprised how the VIX spiked a lot today, which I'm not complaining because I've got a lot of puts on, but that was a big spike today. It may be the biggest spike since March. that would be pretty. That's interesting to confirm that, because this March spike was the mini banking panic with the regional banks, with the select regional banks. So it's another thing that's bearish. But there's bullish things, tech of course, but it may not even matter, even if the banks, because the market's already priced in, I think, a lot of regionals struggling. Yeah, I was looking at these companies like Walgreens and CVS, like the valuation on these are getting pretty attractive. Like the dividend yield on CVS is like over 3%, and the same on Walgreens, I believe. And the price metrics, the valuation metrics are really getting attractive. I think it was maybe less than 20 times earnings. But the CVS, I was looking at the PEG ratio, price to earnings growth, was really low on the Yahoo. I don't know if that's accurate though, but it was really low. I think my take is that the CVS and Walgreens are going to be really good long-term investments, and they'll be a good price this year, or maybe even early next year. Like if they keep going down, if you can get, I mean, if their earnings yield's nice and the dividend yield, that's like, it's a hard to pass on, because it's basically just being bullish on healthcare, and it's like, I mean, the pharmaceutical business, because I really do think there'll be more breakthroughs in pharmaceuticals over the next 5-10 years with the companies using AI. And as AI gets better, it'll even be better, because they've already been using AI for like the mRNA vaccines and things like that. So if these get down really low, that's like a huge contrarian. It's like an easy contrarian play, in my opinion. So let's look at the valuation on these. Like, this valuation is getting nice. I think it will be if it keeps downtrending. Yeah, I mean, it's like $8 a share in earnings, and the stock's at 70. And then we've got, I mean, their growth is going to be good, probably understated. It's probably understated growth right now. Yeah, I think they can do more than 5% growth. It's got a ton of analysts. It's not always the best thing, but stock like this is going to have it. Looks like they beat earnings. They had a really bad year because the thing that happened was their stock prices really got boosted from the COVID vaccine injections. So they had a lot of people going in the stores, foot traffic, that were getting the vaccine, and that boosted their store sales, which is, some good margins. And then they got the more traffic, and then they got the COVID patients or the COVID people coming in, and then so I think the expectations got a little out of hand, most likely too. So it's just kind of getting back to a normal trend. Like it's getting back to the mean, like a mean trend on their growth. So their growth, I'll have to look at how they've been doing the past year or two, but I don't see why they would be in a worse position. I think that's what happened was if you look at the stock prices were up huge, during the COVID years, 2020, 2021, and then after that last vaccine in 2021, it seems that they slowed down as COVID, dwindled out a little bit. So I don't see why, if they keep going lower, it's like a really good pickup for the long term. I actually traded CVS a while ago and just didn't hold the strength back then, but I have to keep them on watch lists because the thing is they're downtrending now. It's in this down channel, so that's got to break to the upside for it to keep bullish. So as long as they keep coming down, that's good, from an investing standpoint. If they keep coming down. Yeah, it sure was low in May. Totally missed that there. I wasn't paying attention. And CVS is the same thing. Well, CVS is a little different. It's not trading in that channel, but it's definitely in a down channel there now. And it took out the lows from there. Yeah, it really tried to bounce there, but it's still downtrending too. You can see that channel, that line there. It's really trying to break through there though, but stock's kind of been in trouble though. I mean, I'm just gonna wait for these to come lower. The Wayfair's it's in a channel now too. The Wayfair's in a really clear descending channel now. It's in like a double channel actually. It just tightened up. So it's at support now. Well, it's coming down too. The other thing I forgot to say, I put on the Peloton puts too. I put on Peloton puts a couple days ago. I put them on this first red day. Yeah, it was that day there. Because I saw this little push out here failed. So to me, it looked like it turned back into a bear flag because it likes to do bear flags. And it just looked like an elongated bear flag. So with a short bias, when it goes in bear flag, that's the setup. So that's my thought is that's more like the bear flag there, and it just broke through. So I put on the puts on this one. I got like I can't remember those strikes or anything. I think it was 450 or 4. But I always like to play it out of the money if I've got the direction really good. The Redfin puts are finally starting to print now. I mean, today was pretty good for my puts, like the charging stocks and that Supernova GRTS. The Shutterstock is looking really bearish too. Like it's got that downtrending channel going. I'm still really bearish on the industry, on these like Getty and Shutterstock, because they're competing against a lot of companies that can do the same thing. And like, I mean, you can get images from a lot of places now and store images. Like I use images, I get them for free with the Bing chat, which runs GPT-4. So I'm using GPT-4 essentially for free with the Microsoft Bing chat. And it's probably not the exact same, but I don't know what the last update did, but you know, for the normal chat, but the image ones, it's using the DAL 3, so I mean, there's a lot of competition now. So I'm really looking at these for puts too. And it's at the lows. I mean, the downside, it's got so much possibility. Looks like 30. The next level down is, let's find that level there. 28, 29. Yeah, it's about 29 is the next support level. So, what is it there? That's 44. Yeah, this thing can go to like 29. And it looks like it really wants to, because it's got a huge top there. And it's just downtrending. The solar stocks have gotten kind of messy. Like, it's just, they've just gone sideways, so I don't like that. It's just, they could be range bound for a while. I like to play breakouts or breakdowns. But so like the play was a breakdown, but it's not something I want to, you know, take a long in. This FTCH has been nice too. Those puts are up 50% on the 1020. I got the 150 strike on 1020 FTCH puts. They're up 50%. And that's, along with the charging stocks, are pretty much my main puts. And but I've got a lot, as you can tell. Like I have a good bit of puts on, but I have calls too, so it all balances out. Sometimes, you know, when the market's up, but this one's been really nice. It's a nice slow breakdown, and this is what I like. This is what I was hoping it would do, because it just likes to do that. It did that in the past. It just, you know, went down week after week, and that was that bear flag right there. So it broke down below the lows again. Yeah, it's a new low today. It's really nice. And I don't think it even has support. No. It's hard to see it there. What is it? Nah, we're at new lows. So it's making new lows now every week. But that's been one of my favorite setups, you know, with these weak stocks, is these bear flags. And the bear flags are great. I mean, you can get multiple days downside off a bear flag, and there's no fake outs like what you see with a lot of bull flags. Like there's probably one of the bigger fake outs was the uranium stocks, I think. Yeah, they did a bull flag a couple times. That was kind of a loser. Those are some losing trades I had with the uraniums. I still have the DNN November calls, but I don't have a lot of hope in these. Euro is probably the strongest. It needs to be even breaking now. I mean, it's really more of a, these are more of a short now because they lost the momentum. But I'd rather trade the breakdowns. Like I like to be picky with my puts, so I'll just stick to what I have some good results with in the past. Yeah, and SIRI was another nice one today. I think I got like, yeah, it was like 150% or so, or 160, something like that on the calls today. And it looks like it went even more. But, I mean, this thing could just keep going. Like I had to take the profit because they expired today. But if it breaks out again, that triangle played out really nice. And I've been talking about this one for a long time too. And it broke out today. Well, let's just test. So the high was 492. No, it's not quite a breakout. 492 is the, if it hits the 493, that's like going to squeeze. It's going to really squeeze out. I thought it was going to squeeze out earlier, but it kind of went sideways there. I kind of expected this to happen, you know, here or here, but it's kind of slow. So it's not a bad thing because it's still going up, but it's got to get over that 492 to be to really squeeze. That's what I was looking for, but I got kind of lucky on that one because the market was red today. So I guess that's a testament to my stock picking. You know, I picked a green stock in a red market. There's not that many green stocks today. But I like that one because the upside could be really big. You know, if it squeezes, it could go a couple bucks or more. Because it's got about 27% short percentage of the float. So yeah, that's about it. So I'll wrap it up there. And I might do another video. If I see anything interesting, I might do another video. But I think I pretty much summarized today pretty well, at least from my end and my perspective, things that I look at. But there's always a lot of stuff, other things to look at too. But I'll bring that up on the weekend if I find anything. So see you next time.